Bitcoin just broke past $118,000. Yes, you heard that right. $118,000 for a single Bitcoin. The headlines are blazing, Twitter is on fire, and your timeline is full of green candles. But before you let FOMO take over, before you chase the hype and throw your hard-earned cash into the market, stop and ask yourself, what's really driving this move? Institutions are buying, ETF demand is surging, and supply is more limited than ever. Are we on the verge of a historic run to $200,000? Or is this euphoria just the setup for a gut-wrenching correction? Today, on FinWise Now, we break it all down for you. Is now the right time to buy? Where exactly is the money flowing? And what do the charts, those cold, hard data points, really say about this market? Stay with us, because by the end you'll know exactly where you stand and what your next move should be. Let's start with the facts, the kind you can't ignore. Over the past 30 days, spot Bitcoin ETFs have hoovered up more than $5.2 billion worth of BTC. That's not a typo. And just this Thursday, we saw a jaw-dropping $1.18 billion pour in, the biggest single-day ETF inflow since November of last year. This isn't just retail enthusiasm or viral TikToks pushing the price up. This is institutional money. Pension funds, asset managers, and hedge funds deploying capital at a scale we've never seen before in the Bitcoin market. As of now, total inflows into ETFs are over $51 billion, and a staggering 83% of that is going straight into Bitcoin. This is a real-time accumulation phase, unfolding right before our eyes. Every day, the float shrinks, and the supply on exchanges drops. It's simple economics. When demand surges and supply is capped, prices explode. That's why you're seeing new all-time highs, why the order books are thin, and why every dip is bought up in minutes. But here's the kicker. Bitcoin's supply is not just limited, it's mathematically enforced. There will never be more than 21 million coins, and most of those are already spoken for. As ETFs and institutions absorb more and more of the available supply, the pressure on price only intensifies. This is what happens when the world's biggest investors compete for the world's scarcest asset. Now, let's talk about market sentiment, because understanding who's buying and who's confused is half the game. Right now, the market is split into two camps. On one side, you have the institutions and long-term holders. They're confident, methodical, and accumulating with discipline. They're not chasing green candles or panic selling on red days. They have a plan, and they're sticking to it. On the other side, you have retail investors, many of whom are emotional, reactive, and often chasing the hype. They see a headline about a new all-time high and rush in, worried they'll miss out. Then, when the inevitable pullback comes, they panic and sell at a loss. This is the classic cycle that repeats in every bull market. So the real question is, which side are you on? Are you following the crowd, or are you thinking like an institution? Are you ready for the volatility, or will you get shaken out when things get rough? Let's step away from emotion and look at the data. On-chain signals never lie. One of the most reliable indicators for Bitcoin is the MVRV Z-score. This metric compares Bitcoin's market value to its realized value, helping us identify when the asset is overvalued or undervalued relative to its historical norms. Currently, the MVRV Z-score is sitting at around 2.65. What does that mean? Well, historically, major cycle tops for Bitcoin have seen this indicator spike above 7.0. At the same time, early bull market phases typically register below 1.5. In simple terms, we're not at the euphoric peak yet, but we're definitely not at the beginning of the run either. There's still room to grow before we reach overheated territory. This is crucial. It means that while we're seeing impressive gains, the data suggests the top is not in yet. There's still fuel in the tank. The market is not in the danger zone, and long-term holders are still accumulating. But, and it's a big but, that doesn't mean there won't be corrections along the way. So, what are the professionals saying? According to analysts at FinWise and other leading crypto asset managers, the trajectory is clear. They're projecting Bitcoin to reach $200,000 by the end of this year. Why? The flows from institutional investors aren't just steady, they're accelerating. Nearly $1.2 billion in ETF inflows in a single day? That's not a fluke. That's a tidal wave of capital, and it's not showing signs of slowing down. Let's break down the price targets. If Bitcoin manages to break cleanly past the psychological $100,000 resistance zone, and let's be honest, it already has, momentum takes over. The next logical zones on the chart: $140,000, $150,000, and then $200,000. These aren't arbitrary numbers. They're based on historical Fibonacci extensions, volume profiles, and the sheer scale of current inflows. But here's the reality check. Pullbacks are normal, even healthy. Don't be surprised if we see corrections down to the $102,000 to $105,000 range before the next leg up. That's how markets work. They climb, they consolidate, they shake out the weak hands, and then they move higher. If you're prepared for this, you won't get blindsided or panic when the price takes a breather. So, let's talk about survival, how not to lose money in crypto no matter what the headlines scream. There's a time-tested method used by the smartest investors in the world, dollar cost averaging, or DCA. You don't need to time the exact tops or bottoms. In fact, you probably won't. It's nearly impossible, even for the pros. What you need is a plan. Accumulate when the MVRVZ score is below 2. That's when the market is undervalued and opportunity is greatest. As the score rises and approaches 5.5, start scaling out, locking in some profits. When we hit 7.0 or higher, historically that's a signal to take significant profits and prepare for a potential cycle top. Remember, you can't control the market, but you can control your system. Emotional trading is the fast track to losses. Systematic, rules-based investing is how you survive and thrive no matter what happens next. Now you're probably wondering about altcoins. We'll have a deep dive on altcoin opportunities coming soon. But for now, remember one core truth. Bitcoin leads. Altcoins follow. If you want to build a smart altcoin strategy, you need to understand what's happening with Bitcoin first. When Bitcoin is strong and institutions are buying, altcoins can rally hard. But when Bitcoin corrects, altcoins usually suffer even more. Don't get caught off guard. Be strategic, not impulsive. If you got value from this breakdown, smash that like button and subscribe for more daily insights. Your support helps us bring you the latest data, the smartest strategies, and the most actionable market analysis every single day. And now we want to hear from you. Comment below. Where do you think Bitcoin is headed next? Are you calling for $150,000, $200,000, or do you think we're due for a big reversal? Your insights matter, and this community is stronger when we share ideas and learn from each other. Thanks for watching FinWise Now. Remember, invest smart, think ahead, and don't follow the crowd. Lead with data, discipline, and a clear plan. See you in the next episode.